Fresh off its separation from Lionsgate, Starz Entertainment is betting on itself as well as the growth of the streaming landscape. Joining me now to discuss the path ahead, Jeffrey Hirsch, Starz CEO and president, as well as Yahoo Finance's Allie, Canal, who focuses on media and streaming for that matter. Jeff, thanks so much for being here.
Thanks for having me this afternoon.
So you guys spun off from Lionsgate, Starz as an independent entity. And so since we have you here, let's get you first of all to just say what that is, right? How should investors be thinking about Starz as independent from Lionsgate, and kind of what are you trying to achieve as an independent company?
It's a great question. I think we're a very investable business. If you think about just going through the kind of statistics of the business, we do $1.4 billion in revenue. 70% of that revenue is already digital, so we look more like Netflix than we do look like an AMCX. We generate about $200 million in profit, so about a 15% profit margin. So as we've transitioned the business from linear to digital over the last 7 years, we've always been profitable. And we'll convert about 70% of that $200 million to unlevered free cash flow. So we throw off a lot of free cash flow too. So it's a very healthy business, and we just came off of our business update last week. We grew the OTT subscriber base 530,000 in the U.S., and we grew the entire U.S. business almost 2%. And so business is strong, and it really starts with our content, right? We have some great big shows. Outlander prequel coming. BMF is premiering this weekend.
Outlander prequel.
Yeah, it's going to be a great show for the fan base that we can talk about. But we have a great string of shows over the next 12 to 16 months that really drive the business. So we're really excited about being a separate standalone business where we can focus on what we do well.
Mm-hmm. And you said before that Starz is a misunderstood asset. What do you think is the most underestimated part of your business?
I think people look at the space today and say, if you don't have scale, you can't survive. And they say, in the land of giants, how could little start? And I actually think that's a strength for us, because with disruption comes the ability to have to pivot and really kind of focus on certain areas quickly. And we've been able to pivot faster than anybody to the digital landscape. And so when I started at Starz in 2015, 100% of our revenue came from the linear business. And we were kind of a cable add-on, a lot of bundling and packaging. And today, 70% of our revenue is streaming. And so we've been able to make that transition. And I think as these large companies try to move and they kind of feel like oil tankers where they take a long time to move, we've been able to move very quickly to take advantage of the disruption in the business.
When people think about the streaming services and digital services, they think about Netflix, I guess, as sort of everything. Disney is sort of family. Like, how should people think about the Starz identity, the niche that you guys are serving?
Well, we really focus on women and underrepresented audiences, and women are 49.6% of the planet. So if that's niche, I'm pretty happy that we have that as a thing. But when we launched our app in April of 2016, the data showed women were driving our business, and so we made a conscious decision to lean in and really solely focus on adult scripted content for women and underrepresented audiences. And today, 2/3 of our subscriber bases, which is around 20 million, are women. And half white women, half black women.
Well, and I would say not just, you say adult content, like it's kind of sexy, some of the shows, right? It's not something that you're going to sit around with little kids and watch. It's for a more sort of sophisticated eye, if you will.
Yeah, we don't try to be all things to everybody in the home. We don't try to serve everybody in the home. We don't have Bluey on for the dogs and, different content. And so it's really, our brand tagline is we're all adults here. Right, so it's just specifically for adults. And what we find with this customer base is, at the end of the day, when they've done their work and taken care of their family, they like to escape with our content because it's their hour to be by themselves. And we think that's a really great place to be in a very competitive landscape today.
We saw the news earlier today that Byron Allen is putting up his broadcast TV stations for sale. We know Comcast, Warner Brothers Discovery, they've positioned potentially their businesses to spin off those cable units. You said before that M&A could help improve your revenue picture. Are you still a buyer? Would you consider yourself a buyer of those linear assets? And what's attractive to you out there right now?
Look, I'm not going to speculate about M&A. What I would say is that we have two very, very, very valuable demos in women and underrepresented audiences, 20 million subscribers with an opportunity for another 80 million total. We have a tech platform that we built ourselves that we can scale, and so it looks a lot like the BAMTech business was that Disney bought years ago. So it's a very valuable business. Now, what that tech platform allows us to do is help some of our linear peers that have been marooned on the linear side by actually giving them a digital product and launching them into the digital world. And so whether that's through commercial arrangements or potential tie-ups between the companies, I think there's an opportunity there. But on the other side, I think what we built is very valuable to anybody who's looking to scale themselves.
Well, let me ask you this then. As someone in this industry, we've seen media deal making kind of take a backseat over the past several years. What will it take for that to pick up again? Is it lower interest rates? Is it more clarity around the tariff picture? What are you watching as sort of an executive here?
Look, we're always watching the tariff situation. Interest rates, obviously, there's a lot of talk about that today and last week, and that's always helpful in a lower interest rate environment. I think DC, obviously, what's going on with the FCC and the SEC right now is really important to watch. Yeah. I do think once folks figure out what I'm seeing right now in this space is a lot of folks are inward looking and trying to figure out who they are and what they do well. And once they figure that out, then I think they'll shed assets before they actually try to combine. And so there'll be a great shedding first, and then there'll be a reconnecting of other things. So I think it'll take, I don't think anything will happen for the next 12 to 18 months, but I think after that you'll start to see people reconfigure their businesses.
And as you mentioned, it sounds like that you are focused not on that rolling up, but more on organic growth and maybe adding services to other networks with commercial arrangements. But then you also mentioned maybe you would be a good acquisition candidate, if I read that correctly, down the road, maybe when that door opens back up to more M&A activity?
Look, again, if you have a very valuable, profitable business that throws off a lot of cash, that has a unique tech platform that others don't, of course it makes you interesting to others. I do think there's an opportunity for us to build around the demos that we have and get to scale and build kind of a scaled media business focused on women and underrepresented audiences. But, again, right now, 4 weeks from separation, we're really focused on, just driving the core business and delivering on the guide that we gave to the street last week.
Yeah. And we were talking a little bit about this during the break, but how has it been going from you were with Lionsgate, now you're separated, you're in the stock market right now. How has that changed your job and your outlook for this company?
It's been a very quick and interesting change. I think John and Michael should get a lot of credit for being, the first to separate the businesses into kind of streaming and studio business, and you see everybody else thinking about that now. My job has really changed to be, I have a board now that I didn't have before, and I have investors and shareholders, and so that's a lot of part of my job, and that's become different. I've been an operator most of my life, and so having to depend on a wonderful team to run the business while I'm out doing things like this has been different for me, but I've enjoyed it.
And so far, the stock has been trending higher.
Yeah, it's been a nice start. Yeah, look, I think ultimately, you look at the two stocks of the two companies and how they've run up since the separation. I think it's proved out that John and Michael on the board, the separation of the assets to put value in the right places has come true. So I think it's been a great decision for everybody.
Jeff, thanks for coming in.
Thanks for having me.
Appreciate it.
Good to see you
Allie. Thank you as well.